All right, so the last time we talked, we were discussing zones, so basically support and resistance. However, I was trying to help you understand an easier way of looking at support and resistance instead of using like you were using the box, the highlighting box, and you were kind of looking at everything on the chart, and I was trying to show you an easier way of looking at the markets, but only looking at the information that's actually necessary to you, information that you can actually use to your benefit. So the last time we talked, we discussed how you should only look at where price is at, and you should have the maximum zones that you should have on your chart should be maybe 4 zones, and that's for a day that's like has a lot of volume. But for days that have no volume, should have like maybe 2 zones that you're working at, because if you have way too many things that you are looking at, you are bound to get distracted and you are bound to start concentrating on things that you actually don't need. So it's best to look at the things that you actually need, things that you can actually use to your advantage. All right. So what you can do, right, is you can go on your monthly time frame. You can place your monthly zones. However, once you have placed your monthly zones, right, you can highlight, okay, monthly high, right? So that when you go on your lower time frame, you know exactly why that zone is there, right? And also, if this zone, we are putting it on the monthly time frame, you might not see it on the lower time frames that we're trading, right? So let's say price does start pushing in that direction of that area that we are, that is the monthly high, then you are reminded, oh yes, on the monthly time frame, I am looking at that high. So now you can put it into play with whatever information is happening at that moment, right? And then this one we can just highlight monthly low. All right. So because this is a high time frame, so this is as these are zones that are actually quite important, right? Now the next thing that I want to discuss is, you see how my zone was like this before I moved it, and then I drew it back, and then I moved to here, right? You should try to minimize it as much as you can to not have your zones cutting through candlesticks, right? If I have a zone that's here, this zone is already wrong, all right? Because I have already missed this zone right here, right? And the second thing is, this is clean traffic. This is a candlestick, right? This is a candlestick that's overshadowing this zone that you're using, right? So instead of putting your zone there, right, you would put your zone where? You would put your zone, sorry. You would put your zone below this low, because before this low was created, we had this high, right? And then this candlestick overshadowed that high and created this low. So you would be putting your zone over here. However, in this moment, we are looking at this zone, because before price reaches this zone, what does price have to do? Price has to break this zone. All right. Now, another tip that I like to use, right? If you look at your monthly time frame, right, and your weekly time frame, right, in this situation, we have a perfect monthly setup and a weekly setup, right, that have zones that are aligning, right? But always try to see if your monthly and your weekly zones can match up in some sort of ways. If they can't, that's not a problem. You can always use the weekly zones because they are much closer to what is happening than the monthly time frame. All right. Now let's go on to the daily time frame. Now, when I go on the daily time frame, I am going to adjust again. Now you see, we have a perfect zone on the monthly and the weekly. However, we can still adjust it, because the reason why we are adjusting, right, is because we're not adjusting to over here. a zone is an area, not a line. So if I have my line here from the monthly to the weekly, that means the overall reasoning for this being so important is this whole area is a zone. So we can put our low at the bottom. So now when we put our low at the bottom, right, we are considering everything that's on the chart from the monthly time frame to the daily time frame, because right now we're on the daily time frame, right? So we are considering everything, right? And we are going to do the same thing on the high. All right, now you see we have a perfect range. We have established the range that price is creating at the moment. All right, now let's move on to the 4-hour time frame. Right, the 4-hour time frame, what you can do, you can pull up your zone, right? You can put it at the high. Now here is where it gets tricky. All right, okay, you know what, I'm not going to cover that point yet. Let's start with the easy steps first. Okay, so this is our monthly high, right? Monthly high. Now we're on the 4-hour time frame, right? So instead of us concentrating on this monthly, right, that doesn't matter to us. Price is right here. Now this area is what's important to us. Now if you look at this area, right, and then go back on the weekly time frame, see, same situation. You have a range that's being created. Go back on our 4-hour time frame, we have a range that's being created. So use that range to your advantage, right? So when you're also looking at this range, whatever happens in this range, it should be able to tell you that, oh, price could actually push lower because we have this range that's forming on the lower time frame. If we go on the higher time frame, we have a range that still looks like it has a low to finish. So price can actually potentially finish the range. So yes, price is ranging right now, but that also means it could push lower to finish the range. It could push higher to retest before it goes lower. It can do anything, but what goes up comes back down. And we are in a range. Price is coming from down, price is coming from up. Where can it go? Lower. And price does not move in a straight line. So what is happening? We had an impulse, correction. What comes next? Impulse. All right, so trading is not about the things, the amount of things that you have to do, the amount of tools that you have to use. Trading is about thinking. Look at the market and think, right? Use all of the information that you are learning and then think. That's all what trading is mostly about. It's about you making the decisions. No indicator, no amount of tools, no amount of drawing is going to be the one that's making the decisions. You have to make your decisions. All right. So since price is right here, what are we going to do? What do we see? I see a lovely high, right? I see a lovely low. So yes, these are my zones on the 4-hour time frame. There is nothing else that I would add right there, because right now what I do know is price has created a low, right? Price has created a low, price has created a high, right? This was the first high, second high to confirm, first low, second low to confirm. Price has touched the up and the bottom twice, confirming our range. All right, so since now I know, oh, so on the higher time frame price is ranging, what can I expect? I go on my 1-hour time frame. Now on my 1-hour time frame, if price is ranging as I say it is, right, what else am I looking at, right? I'm saying, oh, so price hit a low and reverse, right? And it's pushing higher. So what can I expect? I can actually expect price to push higher again before it tries to go lower, right? That's a theory, right? However, if you have more knowledge and if you are using the sessions, that's one, you're using the sessions, right? you are using the volume and you're using however the previous 4-hour candle has closed, you should be able to say, okay, so I know price hit a bottom and it reversed. What can I expect from here? I could potentially expect price to retest before it pushes higher. The reason why we're saying that is we know New York session is closing. Soon it will be Asian session. So that means the daily candle is closing. So if the daily candle is closing, what could we expect, right? Asian traders will want a better entry. They won't want to enter at a bad entry. They want to enter at a better entry. That's why we expect the retracement before price pushes higher. Now, all of this is confirmed as you are watching the price. Sometimes price does follow our theories, sometimes it doesn't. But but how do we win? We use proper risk management to support our theories. And if you use proper risk management, you can lose 10 trades, but that one trade that you win or those 3 trades that you win will give you so much more profit. All right. So that's what using proper risk management is. But it's proper risk management, it's thinking, it's watching the market, see how it does. Like, let it be your best friend, right? Talk to the market. If you can't tell a story, your trade will never win. You should be able to tell me why you entered that trade, what you are seeing, what you are seeing, what you are expecting, and was it worth it? All right. And you should be able to do that. You should be able to enter all of that without even drawing the tools. You should be able to open the market, look at the candlesticks, and understand them. That's why we look at one pair at a time. We look at one pair at a time, because if you look at something and if you look at something long enough, you will know it like the back of your hand, because you've been watching it. You watch your friends and you know them. What makes you think it will be any different, right? So since this is the 1 hour time frame, you can get playful now, right? You can say, okay, for it to continue going higher, it might want to break this high. And where can I expect a retest? I can expect a retest right here, right? Why am I expecting a retest there? Because that was the last low created. So that's the last low price can retest before it pushes higher. All right. If it pushes higher, where is it going? It's going to our high of the range. If it pushes lower, where is it going? To the low of the range. All right. So if price fails to close here, you can watch for price to do something, some sort of a range, and you can always enter that sell aiming for the bottom. And depending on what structure it does here, you can even enter for a little bit more, because price is in a downtrend. That's one thing you should remember. Price is in a downtrend. So if it breaks the low, it's allowed to. All right. If it does retest and then it pushes higher, if you miss the entry here, you can always enter at the breakout aiming for this high. Considering that price is in an downtrend, I would not buy if it breaks above the high. I would wait. All right, because you're not missing anything. Price can break out, but one thing for sure, at some point it will retest. All right, that's just guaranteed. Even if it doesn't retest, if it doesn't come back to the entry that you really wanted, it will give you some sort of a retracement and some sort of a setup for you to enter. Because if we have 3 sessions in a day, each session we will want to enter at a good price. No session will want to enter at a bad price. So that's why price always comes back to those lows, to those highs, because other traders also want to enter at better prices. All right. Okay, so gather your questions and then we can start with that.